Perfect. So let's get to lesson 2. Can you all see screen?
Yes, sir.
Can you all see the screen?
Yes, I can see
Yes, sir.
Can you all see the PPT?
I can see. Listen.
Yes, I can see.
Perfect.
Yes, sir.
Okay. So please drop in the group. Those who haven't joined, let's drop in the group that they should join the Zoom. Okay. Someone should test in the group. They should join the Zoom. We are not using the Google Meet again for the next session. Join the Zoom. Perfect. So welcome to lesson 2 of this class. For lesson 2, we are going to study what I have called elements of a price setup. Elements of a price setup. Elements of a price setup. The cycle of price delivery algorithms or algorithm. Elements of a price setup. So, like I explained from the beginning, the basic or lesson 1, the forex market or trading works with assets or pairs, currency pairs or assets. So, but within the asset or the activity of trading going on in the asset, there is price, an aspect called price. So price is moving up and down, up, down, up, down in the form of buys as in up and then sells as in going down. Okay, so that's the way price moves. So what is the element? Like the live chart we just saw in the ending of the first, just the ended session before this one. We saw price moved up and then it touches a particular place area and then drops down and moved up again and is trying or preparing to move to the downside. So what are the elements that we should know or understand in this cycle of price delivery? Okay, so that is what we want to understand. So the first thing I want us to know is let's find out what a price setup is. So a price setup is a specific condition in the market that signals a potential trading opportunity. So certain things that you must see so that when you see them, you will know that this is a signal of a potential buying or selling opportunity. So like the man asked me right now, how is he going to know that it's going to break below that level? Okay, so these are the conditions that we have to look at and see. So it involves patterns, key levels, and behaviors that should determine entry and exit. That should determine entry and exit. So entry is when you take the trade, when you click or enter, sell or buy. You know all that, those who are new. Okay, when we set up with your broker account and then you start practicing the real trading activity on your phone or on your computer. Okay, but when you click on a sell or a buy, it is entry. And when you close, then it is exit. So what is the price or point where you should enter? And what is the price or point where you should exit? Okay, so these specific conditions in the market that can signal you will help you, okay, to be able to determine the entry and the exit. Price setup is also the foundation of algorithmic decisions making in the interbank system. So it is the large banks or corporations, those with a big amount of money, okay, they make the decisions, they drive. We, the retailers, we don't do anything. Your small money cannot, if you are, the fact that you are buying an asset like BTC or buying gold doesn't mean that gold is going to go bullish or gold is going to go up. No. Okay. It is when the market makers, the interbank systems, the algorithm, what they have structured at a particular level, when those conditions are met, that is what will cause price to move, to go bullish. It's not you buying that will make it go bullish. So the thing is a system that they have designed. Okay. So that is why we must flow with the trend, or we have to, if we cannot beat them, then we must join them. Okay. So what if you are able to understand how those smart people, the big people, the banks, the systems, how those who created the system, how they think. Okay. How they think. If you are able to understand how they think and you begin to think like that, then you will be able to understand the conditions. Okay. And then that will help you to have better entries and exits. So that is just an introduction to what a price setup is. So there are 4 types of behaviors in price setups or in this cycle. And this cycle repeats itself every single day on every single chart. And once the cycle ends, then a new cycle begins. Okay. So the first element of the cycle is called accumulation. The second element is called expansion. The third element is called retracement or pullbacks. And the last element is called reversals. If you are able to understand what accumulation is, expansion is, retracement is, reversal is, and how to identify them within particular contexts on the chart or in price action on the asset that you are trading, this is going to be very, 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 very valuable, and it will change your trading, because this is how the big players they think. This is the knowledge on this is how they see the market. Okay. So the first one, accumulation. What is accumulation? So accumulation is also price consolidation, okay, or ranging. When we are having a ranging market or when price is building up, okay, when price is building up, that is when what we called accumulation. So I will take you to the chart and show you where there is accumulation going on. Okay, where there is consolidation going on. Okay, so what is consolidation? What is accumulation? It occurs when price stays inside a defined trading range and shows no desire to go higher or lower. Okay, when price stays inside a defined range of trading and shows no desire to go higher or lower. So, for example, the chart that I showed on this is the daily time frame, 8-hour time frame, the chart that I showed. Notice here that price is staying within a defined range and it's not making any desire, or it's not giving us any intention to move to the up or to break to the downside. If you are able to identify this is called accumulation. This is called what? Accumulation. So notice the chart. When you take any chart, and I'll show you those who are new traders or new how to find the chart. Okay, so let me just show that to you quickly. Go to Google, okay, your internet search, and just type trading view in the search button, and then open the trading view. When you open trading view, come to product and then click on super chart. Okay, come to product. Okay, product here and click on super chart. Product super chart. The free or trial version is okay. Just click on it and it opens for you chart with pairs in it. Then at the top left corner, you can click on this search button here, and then you can type any pair or asset. So from the introduction, we learned about Euro USD. So you can just put EUR-USD. You see that it appears. This is for those who are beginners, those who don't know this. Then you click on it and the chart opens for you. So this is my chart on Euro USD. Okay. This is my chart that I've been I mean this is my chart. Okay, so let's so this one is derive trading view. And yeah, so derive is a broker that you can sign with to trade, and they have their own pairs like volatilities and other synthetic pairs. So this is one of them, and this is 51S. So that one too, you just go to your Google search bar and type chart.derive, and then it opens. You can click, and then the chart opens for you. When it opens, at the top left corner, you can click and then the search button. Once you delete the search from there, you even have all the options popping up. So the pair that I'm looking at, for example, is called 51S. Volatility 51S. So I will look for volatility 51S. You can choose any pair, and just use it for your analysis. Okay. So this is the 24 hours or daily time frame on the 51S. But what the chart I was showing you guys was 8 hours. So this was the 8 hours. I moved to the 8 hours. And then if you check the top left here, you will see 1 minute, 2 minutes. These are the time frames, okay, that you can view. So on 1 minute, you can view what is happening in terms of price action, up and down, buying and selling, up and down, buying and selling. Okay. So I want to go to, let's say, 2 hours. So this is the 2 hours chart. Okay. So let's see on the 2 hours, the same thing I was doing. There is a range that is created for us here, like a low here, and there is another area here. So you just put your line on the highs, okay, where it touched, where price has touched. So this becomes like a range. This is called consolidation or accumulation. Okay. So when price is making a desire to not to whether you don't know that it has a desire to go up or break out of the range, the consolidation, then we are saying that that is called accumulation. Accumulation is one of the elements of the interbanking algorithmic system. Okay. Okay. When prices accumulating or consolidating, what does it mean? What does it mean? What can we learn about accumulation? Let's notice that this area also experienced some accumulation before it finally broke out. So let's see a low here. I don't know if you guys are seeing that, but around here, there was price. It moved up, hit up, down, like 1, 2, 3, 4. And then the fifth hit here and then reverse and hit here again. And then finally broke out of the range. And then when it got here, it's doing the same thing, similar thing again at the up here. So this was a range that it created. I can move to 15 minutes and then look at this was 2 hours. I can move to 15 minutes and then see how that will look like on 15-minute chart. Okay, so on the 15 minutes, this is the way it looked. Okay, this area of price action. Okay, price moved up to this area, pushed down, moved up to this area, pushed down, moved to the up here again. Okay, pushed to the downside, and then finally, when it got here, it broke to the upside. Notice it's out of the range. Once it got out, look at the way it expanded or it went up. Okay, as it broke out. So this is what we call accumulation, or it's an example of accumulation. Price is accumulating again around here. Okay, so this is an element that you must know, you must learn. So when you check the full chart, okay, the chart has history since the pair started. We can even have history, even when you go on gold, you can have history to a number of years. Okay, because every day the market is moving. Okay, so there is the history. Last week's history is there. Okay, the history is there. So this is what we call accumulation. 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 Let's move on quickly. So this is where smart money, banks and institutions are quietly entering the market. Okay, so one thing that accumulation tells us is that accumulation is when institutions and the smart money, the big players, when they enter the market. When the big markets enter, the big players enter the market. Okay, so that is one thing that accumulation should tell us. Okay, some retail traders will be running away. When market is ranging, stay away from trading. That's perfectly fine. But you should also know that ranging or accumulation or consolidation is a sign that the banks and the institutions are quietly building up momentum or entering the market. Some of the things that I will be mentioning might go against what you know already, but just take it like that. That's why I said there is a lot of information that people know or you might know that might not be what is this what the secret is. Though it's a good information out there which you know, but it might not be a secret for the market. Good. So retail traders may think nothing is happening. Big players are positioning themselves when there is accumulation. So anytime there is a higher time frame accumulation, like on gold. So let's go back to trading view and let me search. This one is Euro USD. Let me search for gold. Gold. Let me search for gold. Or gold is XAUUSD. Good. So I've searched for gold. Let me go to gold on monthly, let's say weekly time frame. So 1 week. This is gold on 1 week. what do you guys think is happening on gold on 1 week? What is happening on gold on 1 week? I can see there is a point that price touched up here, high here, and I can see price came down to also touch a point here. So what is this? What has it given us? High, low, high, closer to low, and then high, and then drop to the downside. Okay, this looks like a range for me. Okay, though there is a little bit of space to here, and there is a little bit of space also to this side before you touch this area again. But this looks like a range. So the longer the accumulation or consolidation on the higher time frame, the better or the longer it tells us that in case price breaks to trend or to the upside, it will go very far, right? It will go very far. So in case price breaks, it will go very far. But there are other factors that we can also look at before we can predict or say that gold is likely to either go down or go up. That is not what we are learning. I'm only showing you accumulation or consolidation. I hope you get it right. Perfect. So let's quickly move on. So this is a sign. Okay, the screenshot I have here is a sign of consolidation. As you can see, there is a range, high, low area, and price was moving sideways, up, down, up, down, up, down. And then finally, there was a break to the upside. There was a break to the upside. The second type of behavior or element of behavior in price action is called expansion. Expansion. Expansion is when price moves quickly from a level of consolidation. As price leaves a level quickly, it is an indication that the smart money or the big players are about to reveal their intentions. Okay, so when price breaks out of that range, that is a sign that the smart money will want to reveal their intentions, or the market will want to show where it wants to go. So sometimes it can break up and deceive everyone that is going up and then drop to the downside. And we can find or backtest to find dozens of examples on the chart or on the history of asset or charts and then show. But this is introduction aspect. It often involves liquidity grabs. So what is liquidity grab? We will learn as time goes on. Example, taking out stop losses above or below the range. Okay, taking out stop losses below or above the range. This phase creates imbalances or fair value gaps and order blocks for future entries. So the moment there is an expansion or price breaks out of the consolidation, it creates a whole lot of conditions or elements or reference points that we can use, okay, for future entries.
What if the other block does not hold?
For future trades. And we are going to learn
What if the
about
fair value
all
gap
that.
does not hold?
So this is an
And what
example.
is it?
Please,
No,
can you
I'll
mute?
wait for it to
Can you mute?
test
Can
and
you
then come.
mute? Hello, can you mute? This is an example of a break out of the ranging. You see, price broke out of the range and then dropped back into a fair value gap. It created a fair value gap, dropped back into it, and boom, to the upside. Okay. And when we go on the real chart, we might be able to see dozens of examples. Okay. For today, I will not have enough to be able to show you, but in the subsequent classes, please, can we try to mute? Can we try to? Okay. So okay, good. So let's see here just a small example. So let's see there was a range, a range. Okay, so I think let's take this area as a range here and then here. Here. Okay, so you see price move up, down, up, down. The moment it was able to break to the upside, it's dropped into this area. This is an order block, and then gave us another push to the upside that gave us a high. But after that, we saw a very big move to the downside. So the idea or the secret behind this is what we are learning. Why did price behave like this? That's why we are here. Why did price behave like this? That's why we are here. So I'm only showing you when it broke out, it left this area as an order block and then it dropped back to tap into it and then pushed up. Okay, so there are people that the moment price is breaking up, they will enter the trade here. Or they might even be late traders. They will wait and they will enter. Though they will be in profit for some time, price finally dropped to their entry or to probably put them in a loss, and then still give us a push before he gave us the push. Okay, so this thing is kind of like a manipulation, but I mean, let's go on. So this is expansion. So we can find a lot on the chart. Okay, so on different time frames, be looking for consolidation, be looking for expansion. Okay, let's move on quickly. We have just 10 minutes to end the whole class. The meeting is going to end, and when it ends, we will end for today and continue tomorrow, Sunday. The next one is retracement. Retracement occurs when price returns to a newly created trading range, or when price breaks, price moves upside and then pulls back. Okay, so for a pullback to be valid, it must have at least 3 candles closing above each other. So when you are trading and price is going in your favor and you see price drop, let's say you are buying and price is dropping, the moment the time frame you are using, the moment price makes about 3 candles closing above or below each other, okay, against you, it should give you a sign that there is a higher likelihood for a better pullback, so that if you would take profit, you take profit. So Gabriel was asking, maybe you are not profitable, you are testing. Probably, maybe you might not know this logic or this idea that when there is a group of 3 15-minute candles on a row, it's a sign that something is about to happen. When there is a group of 3 5-minute candles closing below or above each other, it's a sign that price is going to make a major retracement or pullback. Okay, maybe you might not know. So, and retracement will also happen in order to fill imbalances or fair value gaps, to retest order blocks, and to rip or put late buyers or sellers into an emotional torture. Emotional torture. Those who bought late or sold late, when the pullback happens, it will put them in a loss and they will fear they will close the trade or the account will blow. And after the pullback, price will move to the intended direction. This is a typical example of pullback. Notice price broke to the downside from this low, broke this low. Okay, and then move up, and then drop to the downside. Okay, drop to the downside. The move to the upside is a pull back. Okay, the pullback failed this big candle, which created an imbalance or a fair value gap. It failed it up to the brim and then dropped to the downside. So this is what we call retracement or pullback. I can show you an example too on the real chart. So you need to be able to identify this on the chart. When you are looking at the chart, be looking for this. Okay. And when you see this is what is happening, then you'll be able to know, okay, this is what is happening. And then this is what I should do. All will add up as we move on. The last is reversal. When price turns completely from its current direction to go the opposite direction. So before you see that happens, the market will slow down, meaning that the market will not be moving impulsively or very quickly again, and it will be making an intention to redistribute the positions, and it may change the direction from there. Okay, it forms a new range, and the cycle begins. So the cycle will begin from accumulation, expansion, and then it will go for a pullback, and then it will go for another reversal. So let me show you this last. Let me show you this one on the chart. Yeah, so this is the daily time frame. So let's notice that already the context for this trade was price started from below here and pushed up to the upside. Okay, so let's see something. Price did consolidation here. Okay, at the top here. Okay, consolidate up and down and broke this low, broke out to the low side. Okay, and then it made a pullback into the zone. Okay, this was a retracement, and then it came down and then moved up again, and then it dropped. So you can see here as consolidation and a break expansion. Okay, when you take it from low here to the upside, you can say that price price pulled into the upside, retraced, and then was consolidating up and down, up and down, up and down. Okay, expanded or manipulated. Then from here, at the top here, let's notice that price was not moving at a very faster pace, this range. It just moved up, consolidated, move up. It slowed down. The way it was going up long, it slowed down. Then the slowing down started a new cycle. Slowed down, consolidated a little bit, and broke to the downside. Okay. And then broke out of this area, low here, consolidation here, hit here, broke out of it. So now we are seeing a break here to the downside. So let's notice that breaking here to here, it pulled back, okay, and then continued and has pulled back again. What is this telling us? This is creating another range. Okay, this is creating another range for us. Okay, so it's a little bit complex. It could be a little bit complex right now, but with time, all will come together. And when you are able to identify what is happening, okay, on the market, that will help you to make specific decisions as to how you can also engage in the market. Okay. So this is reversal. Okay, let's see. Price touches the up here. Boom. Where the shaded portions are areas of reversal. Price was going up and boom, quickly drop down. Price goes up, reverse, quickly drop down. Price drop down, reverse, move up. Price goes up, reverse, drop down. This is the way market moves. Market does not move in a straight line. It goes up and it comes down. It goes up and it comes down. Okay, so think of the market like a journey where accumulation is boarding a bus Expansion is when the bus starts moving fast. Retracement is picking up more passengers. You can reverse a little bit or go back and then pick up or stop for a while to pick up passengers. And then reversal is when everybody gets off the bus and the bus returns to another place or changes route or goes back to where it started from. This concept is key. This concept might be all you need to understand for your trading life to change. There is also this example that I picked from the internet. So where below here was accumulation, and then price broke to the upside. There was participation, overbuying or excess, and price drop, move up, drop. So this was a range, and price distributed. Okay, reversal, distributed. Okay, price distributed. Okay, to the downside. So this, you should understand the phase where you are. Okay, so what should you do? Your ability to understand where the move or the cycle is starting from, where the accumulation is happening, where the expansion or the participation is happening, where the pullback is happening, and where the distribution is happening. Those are things that you should understand. And looking at the chart and learning it or backtesting it is what is going to make you find those things. To end with the second lesson, Luke chapter 14 verse 28 says that, "For which of you, intending to build a tower, does not sit down first and count the cost?" Knowledge and preparation are a form of godly stewardship. So you must sit down first and count the cost. You must sit down and